high probability opportunities lately that I'm eyeing for, that I'm actually watching out or over. So let me start with the one that I promised, which is Boom 300. Let me start there. Once I start there, then I'll just give you a quick update of these other ones, what they are doing. Right, so the video, you find it on YouTube immediately after, I think an hour or two, 30 minutes, an hour or two after, you'll find the video on YouTube. I think we'll split it into two, whereby we split it into the NFP discussion, which we did. Then we'll also do this other. So this one, I actually gave the signal immediately there while it was on this zone, which is this supply zone there. I never waited for the shift internally. I just gave it on the zone. There was no need for us to wait for the shift internally, because the stop loss was small, The stop loss was very small stop loss. Was just above here. Someone could have placed it above here, which was also okay. So this is the analysis on Boom 300. This was a signal that was meant for my guys there in the VIP, but we found ourselves just giving it there in the free group so that people they also make money along with us. So it's not really a matter of who is in the VIP, who is not in the VIP, who is in the free, who is not. No, it's not really an issue about that, but it's all about progress. It's all about progress. If you feel like the progress that you are experiencing wherever you are it's okay, continue. But it's always important so that you know that so this is what is happening on Boom 300. This was my structure. 4 hour. I didn't waste much time going to the daily. What. Quick analysis. That was the lower high, lower low. It shifted internal order flow. That's why it's a lower low. That was a lower high. This one is not my lower high. So that's where most of you, that's your biggest challenge. Proper identification of structure, proper marking of structure. This is not a lower high. Someone can say that's a lower high. No, that's not a lower high. It's a pullback of this move. Pullback, and it pulled back before it broke structure here. That's why I'm saying it's not a lower high. So it not being a lower high like that, the market came down, created a lower low there, shifted internal order flow. After shifting this internal order flow, it came back down, which was an opportunity to buy. This was a buying opportunity all the way to this zone. Swing buying opportunity that you could have taken. I remember one of the videos I even spoke about. I don't remember. Is this one or this other one? I don't remember which one is it. Which one of the swing moves it was. Was it this one or this one? I'm not sure, but we spoke about it. So yeah. So after doing that, this was internal structure. That's a high there. Right. So this high, it's a lower high because it's lower than that. Right? This low, it's a higher low because it's higher than this one. So it's actually presenting some form of, it's actually coming up with some form of bullish momentum that is trying to actually eventually flow with. It's actually moving with a certain flow of, I can safely say, someone can say this, you can actually see that this is the lower high. I mean, this is the lower high where I marked this was the lower high. Lower high there, it's lower than that, right? Then here it's a higher low because it's higher than this. Then there now, that's where we had the change of character here, right? Change of character there, us getting a change of character here. We went on to create a higher high, which is there. That higher high, which is here. This higher high was created from this leg, right? This is the leg that changed character. So that being the leg that changed character, the market came back the first time, didn't touch the extreme, came back the second time. So we have a law, we have a law, a swing low and a swing high like that. So having a swing low and a swing high like that, whatever is now happening inside here, it's internal structure, which is what you must. So here, if you notice my my TP for the signal that I gave you for the sell is this one, right? The real TP actually is here around what is this? Around 348 there. That's where personally my own TP, that's where it is. But for the signals, it's actually here. Right. So this is the external structure. We can see that it's giving some bullish momentum there. So the most important thing is for you to be able to know how to separate internal structure from external structure and make sure that that internal structure that you're looking at doesn't confuse. So if you notice here externally, this is an untapped supply that they left out. There's inducement there. There's also some equal laws here, which is liquidity. They actually came back here. They didn't take it out, which is actually also another equal law. This one, this leg and this leg, those are two equal laws. They can still come back to this zone. Don't think that they've forgotten about that zone. How do you know that they can still come back to this zone? So long they haven't broken this high, that's how you know that they can still come back to all those extreme levels that they've left out. This one. So long they don't break, because once they come and break this, it means that leg that broke there, that's our new higher low. But so long they haven't done that, they can still come and tap all those untapped levels. So here I showed you how you could have caught this swing buy all the way from here to there. This was an internal shift. Internal shift, you waited for the market to come back down here, came back to the extreme zone, shoot up. That was a swing buy that you could have taken from this leg, targeting that high that was broken. So after breaking that high, which was what I called the change of character, they also now established a higher high there, which is the higher high there. It's a higher high because it shifted this internal order flow like this. Internal order flow, once it was shifted like that, you could have also caught the cells coming down, whereby we have two kinds of entries, like what I've always been telling you. Guys in the class, I think they understand this better, whereby you have two kinds of entries, liquidity generating entries, as well as what you call the liquidity collecting entries. So in terms of liquidity generating entries, you could have actually caught this cell like from this. You can see there's a certain zone that is there. You would have caught this move, which was not a big deal. But the next other move that you could have also caught was the liquidity collecting move now, which is a move that will come to collect. This is an inducement. Inducement is a form of liquidity. That was an inducement. This one, it was also a form of liquidity that they were going to collect. So here, that was liquidity there. Inducement, liquidity. Inducement is a form of liquidity. Inducement, someone was asking what is inducement in the VIP group, in the signals group. The inducement is simply a form of liquidity that the institutions trigger. It's a move that the institutions initiate. Once they initiate the move, the reason of initiating the move is to make early sellers to sell early. Once they sell early, they'll come back to collect and take out all the early sellers. After they take out all the early sellers, then they continue. So that's how they operate in terms of inducement. So if you notice now internally, this is internal structure. Remember, I told you this is a swing. That's a swing, higher low. That's a swing, higher high. Whatever is happening inside here, it's internal structure. Don't confuse internal structure with the real structure, which is the external structure. Don't confuse internal with the external. So here they came first time didn't touch, second time they did touch. They touched they took out the inducement, touched the zone, which was a good selling opportunity there. So that selling opportunity, they came down. So here in this case, internally, if you want to look at this internal structure, that's your high, that's your low, right? Like that. Here they broke the low. This internal structure now. After they broke the low, they went all the way up. all the way up, they created this new high. So this one, they actually manipulated this one because if you notice, they sort of like, someone could have said they broke. If you go to a higher time frame than this, you realize they didn't fully break there. They actually gave a rejection. That was actually a weak rejection there. This one. If you go to a higher time frame, you can actually see that they actually rejected there. Right. So after they did this, after they broke down there like that, went back up, created the high there. So now this is our new low. This is the internal structure now. So this internal structure is the one that you currently be trading. So they are both internal structure opportunities and external structure opportunities. Internally, for example, in this case, you're focusing on internal ones. This is an internal structure opportunity. That is based on this simple analogy whereby we created a high, we shifted internal order flow. After shifting internal order flow, which was actually here, it's actually here. After they shifted it here, they left a zone, which was a supply, created inducement in form of, they created inducement, also created equal highs, which is all liquidity there, right? After they came out to collect this liquidity there, that's when us now, the professionals, when all the amateurs are taken out, that's when us, the professionals, enter there, along with the institutions. When all the amateurs, which is all the beginners, all the retail, all the people of lesser understanding, after they are all taken out here, resistance, they sell, then they come, they are taken out. Once they are taken out, they think now the market is going up. The market is not going up, my brother. Relax, slow down. It's not even going up. It's just a lack of understanding that is making you to think that it's going up. So after everyone is taken out, then us now, the professionals, that's when we enter, which is where we entered. Now the target now is this first demand. The next target, you can actually hold it to this demand. Why that one? That one now, that's where I'm anticipating a bullish continuation of this external move. So there, we are also going to get swing buys here. We are going to have swing buys to continue this higher low, higher low, higher low, higher high, higher high. We continue, we go higher like that. So honestly speaking, truthfully speaking, this October is a very, very profitable month. Trust me, it's a very, very profitable month, both on the derivative side of things and also on the currencies and indices side of things. Both sides. It's a very, very profitable month. Looking at the at most of the high probability setups that we have in place, those are some of the opportunities that we are most probably going to. So this is what is happening. This is the structure. This is the setup. That's the complete setup for Boom 300. Someone can come and draw 1,000 trend lines here. Let me tell you something about trend lines. Trend lines are not structure. Trend lines are not the they try to describe structure, but they are not the structure. Trend lines, they try to predict structure, but they are not the structure. They are not the structure. Trend lines, they try to predict where structure will go, where the market will go. I'm not even opposing them. I'm simply stating to you that trend lines, and I think I've shown you in various videos showing you the weakness of trend lines, whereby if someone comes and draws a trend line like this, say the market is going up, now we are going up, we broke above. When it comes back here, someone can actually find themselves buying because of the trend line, which is a lack of understanding, because trend lines, they try to describe structure. It's like indicators. Indicators are not structure. They try to tell you what structure is doing or what structure did. They can never tell you what structure will do fully accurately. So when it comes to you realizing consistent profitability, the best thing that I always encourage you to understand is structure. go for the structure. The structure that the trend lines are trying to describe. You understand the structure. Understand the structure, because trend lines themselves alone, they are not consistent. Alone, the trend lines are not consistent. Trust me, you'll find so many times where your trend line will be broken. They will break the trend line. Look at this, touch, breakout. Trend line traders here, they were actually trapped here. Simple example here, they sold hard. Trend line has been broken. Now we are going down where? So they're not consistent with structure. So they try comparing trend lines to indicators. They are better, way much better than your indicators, which is your moving averages, your what. So it's like these are three levels. On level one, which is the smallest level, that's where you have all your indicators, your moving averages, your RSIs, your what. That level, you don't make, there's no serious money that I can say you can make consistently there. You can make money today, you lose money tomorrow, make money today, lose money tomorrow. There's no consistency there. Once you rise to level 2, whereby there are no more indicators now, there are now trend lines now, which are trying to describe structure. They are trying. Trend lines, they try to describe structure. They are not the structure. Then that's level 2. Once you rise now to level 3, that's when you see now, that's where you now go for the structure, where you now understand the structure itself, not what is trying to describe the structure, but you now understand the structure itself. The structure itself, the structure, you now have an understanding of the price itself. Remember, trading, you're dealing with price, right? It's all about price. It's all about understanding price. So those social boys that I said come out of the cell, and then you join in after. It's because of this. Remember, when the market is going up like that into a zone, it will be going up in form of a bullish order flow, right? Highs, high lows, highs, high lows, highs, high lows, high low, like that. So even if when they want to go down, they'll actually change the order flow first before they start to go down. So they've changed now. That's the change there that has happened. So after the change, the next thing that will happen, they'll pull back. They'll pull back into a zone. They'll pull back into a zone. Pulling back into a zone, they're also collecting liquidity in so many forms there. Right. So here, which zone am I looking at? I'm looking forward to this supply here. Why that supply? Below it, there's inducement. This is inducement. This supply zone, if you notice this supply zone here, or this order block, whatever you want to call it, they came, this candle didn't break out, this one didn't break out, this third one, this one broke out, then this next one, it came back inside, then the third one broke out again. So them coming back again, they have to do something like this: come, reject, close below, then they go. So there, I'm looking forward. Let me go to 15 minutes. Let me see if we can get a better clear zone. So if you notice on 15 minutes, it's much more clear because it's this one. So this zone, you can mark it like that. Someone can choose to mark the whole zone like this, which is still fine, because you are saying, so long we don't break above this zone, we are still selling. That's also a proper way of drawing zones, especially these zones. So you can either draw it like that. Someone who can draw it like this, if you draw that without understanding, you can actually be taken out. After the market takes you out, it goes all the way. Like I've seen people doing this, putting their stop loss like this. Hear me, there's nothing wrong with this, but the institutions themselves now, once you know how they think, they also know that you now know how they think. So when you now know how they think, they manipulate now your knowledge of knowing how they think to an extent that here they can come, they can even break. Sometimes they even come where you're anticipating, they break, come, reject here, close below. So when they do this, someone that would have put their stop loss here, already they're taken out. That's why even if you are going to enter there, widen, you can even put your stop loss a little bit above this zone, right? You're just giving room for the market to breathe, as well as giving room for you not to be taken out of the trade. So this is the next entry. This one, please don't miss this trade. You took the first trade, yes, you made money, good, well done. This next, though, that's why I said big accounts, they can even hold during the pullback. That's the advantage of having a bigger account. Sometimes you can even hold through whatever will be happening, because you can decide even to close. You can decide you have a bigger options more than someone with a small account. So the next entry around this level, this one, this is inducement. So people who don't understand structure, they will come and tell you, hey, change of character. This is not a change of character, my brother. This is not a change of character. The minute you say change of character there, it means by the time the market will come back to a demand here, you are going to buy hard. And as you buy hard, they're going to take you out hard. You don't understand structure. Your understanding of the market is still limited. So that's the opportunity. Big selling opportunity that can actually happen overnight. It's actually going to come there overnight. Right now it's what time is it now? Almost 10 o'clock. I think around depending on how it booms up, around the AMs there. That's when you'll find it on the zone. So if you want to sleep, you can even put a pending order just below here so that it's triggered. Sometimes they can even touch and tip, then they don't trigger your zone. So if you want to put a pending order, you can put it just below your zone like this. Put your pending order there, put your stop loss above there, just above there. Then you go to sleep if you want to sleep, which is fine. So that's the best thing there. Then some of the opportunities that I'm looking at, step index. Step index, we are waiting now. Remember, I think we did discuss those that were in the on the TikTok session. Was it yesterday or day before yesterday? I think I described this, that we were stuck in consolidation. This was consolidation, same highs, equal lows. That was consolidation. And here, that's a change of character that we now have, that red line there. So that change of character now, that's a good one. First good sign, number one. And I told you there are two opportunities that we can harness on step index. Number one, we can take advantage of the, what do you call this? Of the counter sell, right? Counter sell the sell either from this zone or that zone. The counter sell, obviously right now what you're waiting for is a shift of internal order flow, because if they don't shift internal order flow, they can even come all the way here. They may be reject from the zone there, then maybe start to drop from there. That's why you must always wait for that internal shift in order flow. It's a green light to tell you that we are now going. That's why you must always wait for it. If it's not there, the market will keep on going and going and going and going beyond what we are even expecting. So before you jump into trades, wait for that. So change of character, clear change of character. I'm now anticipating swing buys. That's why I say this October, it's a very profitable month. Trust me. Trust me, mark my words. Very, very, very profitable month. Very beautiful setup, swing setup on step index. Swing setup there on B3 that I showed you. This one, I'm actually anticipating it to go higher and higher. The next major target is there up there. So these are opportunities that can even run for the whole week. Whole week holding one opportunity. It can even go for 2 weeks just from here to there. If you notice, just from here to around this zone, it will be around 23 October, 25. It can even last the whole month holding one swing. So what you can do lately, if you notice B3, the opportunity there, it will be pro trend. it's with the trend. You are following the trend there. The trend is bearish, internal and external. I mean, internal order flow. The internal is actually bearish, which is good, as well as that other external structure is also giving some bearish signs. So if you notice step, the external, this one, which is because on the daily you realize that this is the internal, this one which is happening now. So which is currently bullish now. It's now bullish. So it being bullish like that, when you take sells, it means you are countering. So when you counter, you must also know that wait for solid confirmations before you jump into counter trades. So before it starts selling, make sure that there is full confirmation, especially on the 1 hour, 30 minute. Make sure there's full 1 minute, 50, 1 minute, 5 minute. Those ones will deceive you and tell you that we've changed character. Yet there's no even a change of character. That's why you must make sure, be so careful. So here, if you notice, there's also this zone. This is a higher probability supply there, because below it there's inducement. So that's why the probability of them still pushing higher there is there. It's there. The probability of them still pushing higher into that zone is still there. Them coming there. Once they come there, they play around, change character, do what, then they go down. So step index, that's also an opportunity that we're eyeing for. Big opportunity there. Another big opportunity is on the Volatility 75 index. So those are three major big opportunities basically that I'm eyeing for. Boom 500 as well. So those other ones will simply be waiting. We are simply now waiting for what do you call this? We're simply waiting for confirmations or for the market to come to the zone. So you realize that by the time we'll be in a certain opportunity, the other one will still be cooking. So which is good. Vix75, just a quick one. Change of character, major extreme demand. That's a higher high. Swing high, swing low, previous low, swing low, previous swing high, like that. That's the structure. Almost a similar thing to Boom 300, if you notice. Almost a similar thing to Boom 300. That's why I always say, once you have mastered the structure of the market, you're now dangerous, because you can even predict what will happen. You can even predict the next 10 moves of Vix75 before they even happen. It's possible. Very, 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 very possible. So yeah, what did they do? They changed internal character here. After they changed internal character, what did they do? They came first time. So here to the top, if you zoom in properly, you realize that there's a certain zone up there, certain supply zone that they didn't touch there at the top. Let me mark it nicely. Here on the 4 hour, if you zoom in like this, that supply there, they didn't touch. They didn't touch there. So don't think that they have forgotten about that. They haven't forgotten about that. So notice this is my external structure. This is now my internal structure. So don't confuse external structure from internal structure. That supply, they haven't forgotten. So I'm still anticipating them to touch there before they touch there, before they go up. So you will notice that the major opportunities will be the push up there, the push down, and the push up. three major high probability opportunities. They're going up, they're coming down, and they're going up. The reason why they have to come down from there before breaking it is because there is an untapped demand there. There's also liquidity and inducement that is below here. Once they come and break here, like from this leg, it doesn't make sense now. It doesn't make sense. It doesn't add up because they have left inducement and a lot of liquidity. Right. They would have left a lot of liquidity, which is not their proper way of doing things. Their proper way of doing things is whereby they can come before they break the zone. They'll come down, collect all forms of liquidity inducement, tap into an untapped demand, then they fly up. So before they go where they want to go, they'll collect all forms of liquidity. Here, this is inducement. There's also another inducement there. So they can come and collect all of that before they come down. Same thing here. Before they go up, they'll come and collect all these things before they go up. That's the understanding now. Your understanding structure is pure as it is. As pure as it is. Once you have the understanding of structure, as pure as it is, looking at the market from the way the market movers look at it, my brother. So here, they changed character, change of character there. Here, they broke down here. But the real thing here is what is currently happening internally. They changed character there. Someone can say they changed character there, which is okay, right? If they change character there, or even here, but it's here, because if you notice the external levels, here they broke. After they broke this leg, someone could have maybe thought they are going to sell here, which is a wrong perception, because the previous high is this one. That's the high. That's the low. So if that's the high, that's the low. They came back here. They didn't touch the extreme. They came now and took out this low, which was okay. Then here they broke to the upside, which is a change of character to the upside, giving us also here, if you notice. So you can say something like this, then something like this. So this internal, it mustn't confuse you with the external. So here you can notice that here they broke down, here they broke up. So now we are currently in the upward side of things. So here, that's why I'm saying from there, the region where it is now, which is here, this leg, I'm anticipating them to go all the way up, because this is a bullish, this is a bullish structure currently. We have a higher high. Come here, this is a previous low. That will be a higher low. We go all the way up. We take out this higher high, touch into the untapped zone, then we drop from there. This is the internal structure. It mustn't confuse you with the external structure. So that's my bias now. Once they break here, it means they can't now come. They can no longer come to the zone there. Why? Because they would have said this is now our lower high. They would have confirmed this as the internal lower high. So for now, it's not yet there. That's not the high there internally, because they haven't broken below here. So long they don't break below, sometimes they can even come and temper here, temper, reject close above, then they fly. Those are sniper opportunities that you must always be eyeing for. If they don't do that, they'll simply tap on the demand. For example, in this case, they are currently on a demand here. So those are 3 high probability setups that I'm actually eyeing for right now. And if you notice, they are all going to be on the zones at different times. At different times, all of them, they are going to confirm differently. Here, they touched the demand. Someone could have jumped in. Nothing wrong with that. The most important thing is for the internal order flow to shift. If that internal order flow hasn't shifted, they'll simply use US liquidity. So here, all these other zones, they are not necessary. The real target, that the first major target that you're eyeing for is this high there, this one. So once that high, once they take out this high, tap into that zone. So this can be your first major, then that one second major, like that. So this is a swing trade as well. Swing trade that I've been waiting for, actually. Been waiting for that. So going down to the 1 hour, you realize on the 1 hour, if you go to the 1 hour, you realize there's a zone on the 1 hour that they haven't taken out, that they haven't touched, I mean, which is a demand there on the 1 hour. If you notice on the 1 hour, I don't want to delete this 4 hour zone. I just want to put a 1 hour demand within that 4 hour. So what I do, especially when it's a zone like this, I have this fair value gap, which is this zone. Then I also have this 1 hour demand here. I'm actually anticipating them to come and touch this 1 hour demand before flying up, which is actually it's still possible, because if you follow the internal structure here, this was the previous lower high, they didn't break. That is what is giving me confidence enough to say they are going to take out, they are going to actually come to that zone. So them not taking out that, this is equal laws, those equal laws, that's liquidity. This is liquidity. The real high probability zone that I'm eyeing for is this one. What is this? Right, that's the real zone that I'm eyeing for. So even in terms of targets, these internal targets, you can simply use them to shift your stop losses, to lock your profits, especially these 1 hour levels. You can use them to shift your stop loss, lock profits, like this, right? So this is what I do. That's the entry that I'm anticipating. Here, had they broken this, that was a change of character. It being a change of character, they were going to come back to this demand and shoot up, but they didn't. That's why I'm saying they can still come back down here. So then coming back down there, you have something like this. Come down, go up, change character here, change character there. Let me draw the proper way. Down, change character there, tap into the supply there, drop, come back to mitigate the zone, go to the next levels, touch, that's like that. So that's my current anticipation. So this one, when you enter this buy, if it comes here and you end up on the rejection, that will be a risky entry, right? The next set of entry will be a confirmed entry. The confirmed entry will be after they shift this internal. Once they come and shift the internal here, now if you enter again there, you are now entering a confirmed. That's a confirmed, much more confirmed entry. So you can enter both of them. The initial one, if your account is a small account, the initial one, you don't even need to go hard. You just need to go normal risk. Once they come, change internal structure, come back down, that's when you can increase your risk, because you would have made money on the initial move. The initial move, which is what we call the liquidity generating move, you would have made money. Then as they come down, come back and mitigate, you now have more profit that you can actually utilize to make more profit. So this is a big setup as well that I'm looking at. So that's big setup number 1. Big setup number 2, step index. Step index, as I said before you jump in the cells, wait, relax, slow down. People, they're busy trying to jump in, but it's not yet ripe. It's not even yet ripe, this one. So that one, wait. Then B3, I showed you that one. We have fully confirmed a shift in internal structure. It has shifted. Then I said, wait for just a boom. Wait for it to boom, 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 boom. Once it booms, comes to a supply, you can rejoin. If you're still in, you can still hold. If you're still in the trade, you can still keep on holding, because they can even drop all the way into a zone like this. They can even drop all the way to this zone before going up. So this is my anticipation. Then like that. So this is what is currently happening. So those are the 3 major setups. B3, it is confirmed. Step index, not yet confirmed. Same as Vix75, it's also not yet confirmed. B3 confirmed. So B3 is the one that you must be focusing on now. Then on this